So, after its surge to parity, the Australian dollar is looking pretty settled back in the high 90s. As Treasury, multinationals and exporters grapple with the impact of its strength right now, the prospect of another surge and a bigger potential headache lies around the corner. Well, joining me in the studio to discuss this is Kathy Lien from GFT New York. Kathy, welcome to Lateline Business.
It's a pleasure to be on.
Well, the Aussie through parity since we spoke last. How significant is this and where is it going?
Well, I think, the parity level for the Australian dollar was a very contentious point for a lot of investors. They really wanted to test that level, and once it was tested, it reversed almost as quickly. And I think that right now we're seeing the Australian dollar pull back simply because a lot of the quantitative easing expectations for the Federal Reserve have paired after the good data. And I think that the Federal Reserve will probably end up underwhelming next week. So I think as a result, that could cause the Australian dollar to fall a little bit more, maybe towards 96, 95.50. And that should actually be seen as a good opportunity for investors to get back into the markets, because at the end of the day, the RBA is still expected to tighten by another 50 basis points, maybe even 75 over the next 12 months.
So how much do you reckon that the dollar's rise and the increase in trading volumes, because it's now like the fifth highest traded currency in the world,
right?
How much of it is it due to our strong economy and how much of it is a speculative punt?